Glad to be joined by you today. This is our second episode from the Enforcement and Asset Recovery podcast at Deminor. And we're delighted to be joined by Henry Burrows of Hoptrail. So Henry, just be great to hear a bit more about your firm. So feel free to just introduce yourself and give us some initial pointers.
Thanks very much, Ollie. Great to be on your podcast. So I'm the CEO and the founder of Hoptrail. We're a UK-based blockchain analytics company. We started the business 3 years ago, and we predominantly specialize in source of funds and source of wealth analytics. That's basically sort of using blockchain data to help our clients understand where the money comes from on the blockchain and what the risks are and who the counterparties are. So we're sort of piecing together that puzzle for them in the ecosystem. And because of that, we're working mainly with traditional regulated services, banks and law firms and trusts and professional services firms. But because of what we've built as a business, the products that we've built, we also do end up getting involved in asset tracing, investigations, and crypto-related dispute work, where we're using our tools and techniques and know-how to help our clients kind of unpick tricky issues or get to the bottom of complex litigation issues. So hopefully that gives you a brief but clear sense of what we do as a business.
Yeah, thanks. Super interesting. And so you set up the firm, as you said, a few years ago, and you've had a really busy year, which is probably unsurprising. Where have you seen most of your work? I mean, as you said, is it sort of crypto-related litigation, arbitration? Is that on the rise, and has that had a knock-on effect for you?
Yeah, I mean, so for us as a business, because our core service has always been that the source of wealth part of our world, the understanding where the money comes from, our core business will always be for banks and what is a product that we call on-chain onboarding, so helping them to onboard their customers, get comfortable with crypto assets and the provenance and legitimacy of them. And that's always been our thing. Like when we started the business, part of the reason why I started it was because I was having issues explaining my crypto proceeds to a solicitor. I was trying to buy a house in 2019. And, she asked where was my money coming from? And I said crypto, and she basically had a heart attack. And I realized that, this is a problem for me, but it's a problem for a lot of other people as well. So we started to build products to kind of solve that piece of the puzzle. And that's been running along nicely for a few years, and we're getting some interest in the UK and Europe and wider now. Particularly among banks, because banks, I think, have just realized that the blockchain is just this amazing compliance tool where they can solve a lot of their due diligence headaches if they know how to read the data properly. And that's what we provide those solutions. But this year, we've had a massive uptick in investigations. I don't know what to attribute that to. I think it's partly that people aren't getting to know about Hoptrail, and that's one thing, and they're coming to us because they've got an emergency and they need it solved quickly, and we're quite flexible and rapid response. But also just because participation in the crypto ecosystem is growing. There's over 500 million people that have crypto. Most of those people are in their 20s and 30s. And there are an enormous amount of people making an enormous amount of money. So it makes sense, when stuff goes wrong or money goes missing, that you'll reach out to firms like ours and try to recover it. Back in the day, you might have lost 200-300 quid in Bitcoin, thought, well, that was interesting. But nowadays, thefts are in the millions, and they are for us, difficult issues to solve, and people are desperately trying to get their money back. So I think we're seeing a combination of factors happen there. The truth is there aren't that many firms out there that can do what we do. So you've got a handful, and there are 2 or 3 at the top of our world that are mostly working for law enforcement. But then there are others who are working predominantly for the private sector, like us, who are doing more and more of this work.
Brilliant. So, I mean, just to take it back a few steps, on the enforcement and asset recovery team at Deminor, we see an increasing number of cases come up these days where, these sort of traditional assets we're looking to enforce against real estate corporate interests are not always there, but we might find some information in the public domain, or the client might give us some pointers to say, we suspect that the defendant company or the defendant individual likely has some of their wealth tied up in crypto. And it feels still quite unregulated. I think a lot of people are worried that when they worry that they've been defrauded, there's no chance of getting any of their crypto back. But what you're saying is there are now increasing numbers of ways that you can do that, and that all hope is not lost.
Oh yeah, I mean, there's a lot to unpack here because it's so fast moving and there's so much you can do. I believe it's much easier to do asset tracing in the crypto world than it is in the real world. Looking for property and other high value assets in the real world around the world is time consuming, it's costly, it's not always successful, and you may spend a lot of money and not get that far. In crypto, it's a different story these days because every transaction, let's just take Bitcoin for an example, because every transaction that's ever done in Bitcoin is recorded on a ledger that's publicly available for everybody to see. Every single transaction, including all those thefts and scams and hacks that have happened ever, are on the internet for everyone to analyze. So it's just a case of getting that data and knowing how to use that data and analyze it to piece together the trail of some stolen assets. And the reality because of that is that it's really easy to find stolen assets on the blockchain. I think the recovery bit, which you mentioned, is much, much harder.
Yeah.
And I don't know, I don't have any sort of figure. I think it's low single digit percentages for the amount of assets that get recovered in the real world. But crypto, it's certainly growing because we've got the ability to identify where the assets are pretty quickly. And then it's a case of figuring out, right, how are we going to recover those funds? And that then is it's almost like a separate step in the stage that you have to go through. Because the first step is, do I have enough intelligence to say to follow the trace, or to identify which wallets are controlled by which individuals or entities? And that's just literally a case in our world of using a platform that has the right algorithms and heuristics and wallet tagging and tracing capabilities. And then when you find the assets, you're like, right, okay, on to the next step, which is recovery. I think recovery for you guys and for us is a really interesting part of our world, and it's really developing quickly in terms of how you do it and what you need to know and how you need to go about doing it. It's certainly the case that it's becoming a more formalized process. I've heard stories like yours where you can just get in touch with someone who runs an exchange and they'll help you out. I think that's probably going to be less the case these days because exchanges have units that deal specifically with law enforcement requests, and there are increasingly quite stringent requirements to kind of fulfill those things. So it's definitely evolving.
And I guess on a related note, when in the process, or when clients are in the process of litigating against individuals, companies, and trying to recover, as part of the recovery process, you might be asked to prepare evidence for freezing orders and injunctions as part of those proceedings. Can you, with obviously without going into any specific details, just run us through maybe how that process works and what sort of work you do to prepare those?
Yeah. So, for any sort of relatively standard case, let's say it's a theft of Bitcoin or Ethereum, the first step is to pull together the evidence pack, which is essentially providing the flow of funds from the victim's wallets to wherever those assets are now on chain in those wallets. So you're pulling all that data together to explain how the funds moved through the ecosystem and how you can prove that they are now sitting at these other wallets here. And so that's the first step, and you're doing all that. you're obviously at that same time overlaying any attribution kind of, Hoptrail has 350, 400 million tagged wallets. So at some point in the chain, you're kind of looking to see whether those assets are hitting a centralized exchange or a virtual asset service provider that you know of. Coinbase, Binance, Kraken, Bitstamp, something like that, where you can say, okay, we now have someone to go to say, please, can you freeze these funds? And that's where you start to do some other steps, which is preparing things like freezing orders. Now, in the UK, generally speaking, the process is, if you're the victim, you want to file a police report. You've got a number now, a case number, which often the exchanges will ask you for. Then you've got the evidence pack or the on-chain tracing data that you need to explain and show the evidence. Yeah, this is where the funds came from, and now this is where they're sitting. And then you can either do two things. One, you can go to the exchange and say, hey, I know that those stolen funds are sitting in this address at your exchange. And in the past, sometimes exchanges have cooperated and said, okay, you've got a police complaint, file. If you've got the evidence, then they may do something. But typically now they'll only accept requests from lawyers or law enforcement agencies. And they will also usually now say, right, well, yeah, we can see that. We had this recently with a large exchange. Said, yeah, we can. We're like, the funds are now sitting like in this wallet at your exchange. Please, can you do something about it? They're stolen assets. They're like, yeah, we can see that, but have you got a court order to freeze these funds? And the client didn't, so we went away and got one. That process can take weeks. It's expensive. You have to then explain to a barrister all of the evidence, provide witness statements, go to the court, get the freezing order, and then go back to the exchange. And then hopefully the exchange will say, okay, fine, you satisfied the requirements. In some cases, the exchange will be quite difficult. And it really also depends on how complex that tracing has been. If it's gone through multiple wallets, they may start to push back and say, I think, there's a reason to say that, some of the assets have gone to another service prior to ours. And so it's nothing to do with us. We've had that before. So there are a number of complications to get to. And frankly, the legal system in the UK, although, it's very good, it's slow. It's timely, it's time consuming, and it's expensive. So by the time you've got the freezing order, sometimes the money's gone from that account. And it's really quite difficult to that's partly why we can't recover funds that well, because there's a disconnect between the speed at which crypto moves and the legal system in the UK. Then you've got added complications of if whether the assets have remained in the UK or gone offshore, and then you've got to look at other jurisdictions, and there are other complications like that which do factor into these things, which make it quite difficult to actually recover funds.
So what I'm hearing is that it's still a very it can be a very complex process that is still kind of fraught with danger, and you're not always guaranteed to get the full recovery, let alone even a partial recovery. But to me, it seems reassuring, I guess, that we are catching up with fraudsters, let's say, and there are increasing numbers of mechanisms that we as investigators and law firms and clients can leverage in the hope of recovering some of their assets.
Yeah, to a certain extent. Although I would say that fraudsters, they're always slightly one step ahead of the game. They will, do some complicated particularly in Ethereum. They will never take stolen assets unless they're really stupid and just like deposit them straight to an exchange, because that's an easy win for anyone tracing it. They'll do lots of complicated transactions or many transactions. They'll swap into other assets if they can through decentralized exchanges. They'll go onto other blockchains by bridging assets. So it becomes a really difficult game of cat and mouse. And that notwithstanding the ability to trace, often the client has lost all of their money. So, you know, that you don't often have a lot to play with in terms of upfront funds to kind of chase down these bad actors and the resources required to kind of see it through to the end. And that's one of the biggest issues I think, we'll talk about later, like some of the solutions I'm hearing about in the market with that. But there are a bunch of issues. We're getting better. There are some barristers out there that really get crypto. There's some good judges too, actually, that get it too and understand what we're trying to do through the courts, but still a slow process.
Well, I guess it's a nice segue into one of those solutions, which can be third-party funding, and that's something we're seeing an increasing number of requests from clients who are looking to recover their crypto, or just more generally where, specifically in terms of enforcement, clients have awards or judgments and they're looking to enforce those. And one way we can do that is see if the debtor does have any crypto assets. So it's still a very, very fledgling area, as all of this is really, but it's growing steadily. And I've seen, we've come across in the US, even things like initial litigation offerings and also litigation finance firms that, specialize in crypto cases. Have you come across, do you have direct experience of working with, third-party funders? If so, what has that experience been, or perhaps you haven't yet?
I mean, we've done a lot of work with law firms. We haven't done so much with third-party funders, but I do hear a lot about that world, and I think it's something that you'll see a lot of development in over the next few years. A lot of interesting tech that's being developed to kind of either speed up the process or enhance that process to identify other stolen assets if you're looking to build a class action. And so we do come across those kinds of things, but it's typically what scenarios that we get involved is when individuals have lost assets and they've come to us direct, or a law firm that is representing them has come to us. It's not usually third-party funders, although we have recently been approached by, I guess, a pseudo third-party funder that is providing insurance after the event for people that have lost all of their assets, so that they can secure the funding to be able to kind of do the on-chain analytics and the recovery. But it's not, that's kind of like a slightly niche area of your world, I guess. But I'm beginning to hear about these new solutions, which I think is super interesting. But I haven't really come across it too much at the moment.
And lastly, Henry, where do you see the future of crypto analytics and investigations? I mean, I've even seen some talk recently of Michael Saylor, founder of MicroStrategy, potentially transforming his company into a Bitcoin bank, which would presumably mean a lot more work for companies such as yourselves when it comes to onboarding and source of wealth and that type of thing. Where are we heading in your view?
Well, I mean, on the Saylor issue, I think it's just because his business is now basically the entire balance sheet is pretty much Bitcoin. Like, he's still selling some software, I guess, but he might as well at that stage just turn it into a Bitcoin only company. And that kind of does make sense. Like, if you look at Bitcoin, or if you look at crypto as a new financial system, which a lot of people in our world do, it's a way to transact and a way to get involved in financial tools without a third party intermediary like a bank being involved. So you can obviously you can lend, earn, borrow on chain without having to have Barclays or HSBC in the middle. But part of the tracing work that we get is because it's quite complicated. This world, this kind of burgeoning, fast-paced world of decentralized finance is creating lots of interesting things, lots of headaches, and also lots of opportunities for bad actors to steal funds. Because me and you are the bank, right? There's no one. I can't call anyone up once I've stolen my funds and say, hey, can you reverse that transaction? It just doesn't work. You can't call up Bitcoin. So there's a whole bunch of stuff that I think the risk is that you're and providing players in our ecosystem with the ability to kind of control their own money, and that's great. But there's no recourse, and there's so many complicated tools out there that it's a real opportunity for people who know more than others to take advantage of them. And that's where a lot of the stolen funds and hacks and exploits are coming from that we see. But in terms of the future of crypto, I think the way I look at it is, I said to you earlier, there's about 500 million people that are holding crypto right now globally. And that's grown pretty quickly in the last 2 years. About 30 to 40% of that number is people in their 20s and 30s. So naturally, like over time, the people that are holding digital assets are going to get older, and that the percentage of that number is going to increase from 500 million to 1 billion and more. And that's really happening in places like South America and Africa, the Middle East, where you're not just getting people using crypto, but you're getting enormous numbers of people making massive amounts of money in crypto. So the last 2021 bull run, I'd heard, like, this is anecdotal, but I'd heard that there were around 1,000 to 2,000 millionaires being created every day of that bull run. And in the recent run up in late 23, early 24, there was around 1,000 a day. So what you're getting is a lot of young people. It's a generational wealth shift. A lot of young people making money. Back in the day, it was like, we'll make some money off stocks and shares or property. And now it's digital assets. And the problem we're seeing is that then when you interact with traditional regulated services, everybody just goes, whoa, crypto, that's way too risky. Or they'll say, how did you make your money? And they'll say something like, I was staking Aquagoat tokens on PancakeSwap, obviously. And, the solicitor or the banker just will not understand what's going on. And so the driver for our business is, can we help bridge that gap between digital assets and traditional regulated services? And that's the same for tracing and investigations. Because it's kind of tech heavy, you have to reach out to these players that know how to do this stuff and have the platforms to be able to scale it, automate it, speed it up, to do it within it's a race against time. When assets get stolen, you've got to be quick, because the bad guys know if they're faster than you, then they'll get away with it in crypto. And that's the thing, because obviously if an exchange gets hacked, at some point they'll put out on Twitter, we've been hacked, here's the address where the stolen assets went. And so everyone's watching, right? Everyone's watching on chain. But if you're quick enough and you can get away with it before anyone starts watching, then you can always cash out. And well, you can't always cash out, but you can always be one step ahead. And so, I think there's an increasing demand for our services and tools, because the growth of the industry is butting up against these issues that people are finding, losing funds, getting things wrong, stolen, having headaches with onboarding, compliance issues. All of this stuff just is stuff that I think we're seeing growing quite quickly. And for a business like that, I was just trying to buy a house, a few years ago, and now look at me. Like, we had to solve a problem for me, and then for everyone else. It's nice to be able to do that. To be honest, to still help people get on the housing ladder in the UK, it's bloody hard, but I still do it because I really like it. Because you've got an 18-year-old with 20 million Shiba Inu in their wallet, and they're unemployed, and the solicitor's going, where's this money coming from? But we can actually turn around and say, no, it's legit, and here's why. And that's really quite rewarding, actually.
So I actually hadn't thought of that, just that proposition at all. You're absolutely right. I mean, the system still seems fairly rigid, but you can only borrow according to certain circumstances that you might have. But because this is such a nascent sort of industry, as you say, 18-year-olds could have become millionaires overnight, and they want to buy property in London. How do they do that? Fascinating.
Yeah.
Well, Henry, thank you so much for joining us today. It's great to catch up and to hear more about Hoptrail and what you guys have been doing, and would just hope that we're able to catch up again soon.
Thanks a lot, Ollie. Yeah, nice to be on.